welcome to another edition of BCR Webcasting. I'm delighted to be joined today by Vikrant Yadav. Vikrant is Head of International Business Europe at Credable. Vikrant, delighted to see you this morning, and I hope you're well. And thanks for joining us. Vikrant, you're going to be speaking at our Trade and Investment Forum on the 16th of April. Which is going to be at the offices of SMBC at the city in London, and your particular session is going to be about emerging market prospects, with a focus on Asia, Africa, Middle East, and how's the climate for investing in those markets, and looking at yields, how they compare in those different markets. So. Well, first of all, just quickly tell us a little bit about Credable, will you, Vikrant?
Sure, Michael. It's a pleasure to be here. So Credable is a fintech company. We are focused on solving the working capital financing challenges for the enterprise ecosystems and SMEs, and we do so by offering our banking as a service platform and licensing it to leading banks. We have been in business for the last 7 years. We headquartered in India, but now with operations across APAC region, Middle East, and Europe. We basically handle close to $6 billion throughput on the platform. It really helps the SME vendor as well as the dealer distributor ecosystem to get access to financing when they really need it. So we are on the mission of really solving the working capital gap that we see still existing across the markets. So this is what we do at Credable.
Okay, and let's now talk about these emerging markets and why they might be attractive to investors. So what's your take on that? Why should these markets be attractive to investors? I suppose the yields are higher, but then the risks presumably are higher too. So just tell us in your own words, what is the particular attraction for investors?
Well, Michael, when you invest your money, you put your money at work, there are risks involved in it. But I think the question for the investors is whether they can make risk-adjusted returns that make sense for them, right? I mean, look at the world today. You see emerging markets growing at really rapid pace, despite all the challenges that we see around. India is growing at 7% plus rate. Look at Southeast Asian economies like Vietnam, Philippines, Indonesia growing at 5% plus GDP growth rate over the last few quarters. There have, of course, been some macroeconomic challenges. We have seen some of these currencies under pressure because dollar has strengthened. Look at dollar index is, I think, hovering around close to 104, which was 90, 92 levels, let's say a couple of years back. That, of course, put pressure on the currencies, which basically means that the return for the investors will come down proportionally, right? Having said that, I believe emerging markets present massive opportunities for the investors. And my advice to investors would be when they evaluate emerging markets, don't do a few things, right? One, don't club them as one grouping. These markets really differ from each other, and it's really important for the investors to understand the nuances of these markets. I mean, look at countries like India, Vietnam, South Africa, Nigeria. Now they are at a different growth stage as well as the growth trajectory. India is today at $3,000 per capita income. I think Vietnam is close to 4.5. South Africa is close to 6,500, and Nigeria is much lower, close to $2,000. But they're really growing fast, right? That means there are massive opportunities for the investors. But I think before investors really decide to sort of put their money at work, there are 3-4 things that they need to really evaluate and understand. One is the sustainability of the growth factors in these economies. While they are growing fast, but can they sustain these growth rates in future? I think that really is the key factor. Which means investors will get better returns and will be able to deploy more funds in this market. I mean, the second is digital and public infrastructure. Michael, I mean, we know this, right? We make returns or the growth happens when either there is productivity gains or there is growth in the population in general, right? Demographic gains. And what we have seen in Western world today is while last 2 or 3 decades there have been massive productivity gains, but these gains have sort of plateaued a bit. I believe the investment that some of these emerging markets have done in digital and public infrastructure is massive. That's actually leading to great returns, right? Look at India today. A lot of data has been digitized through GST, through open credit platforms like OCAN, ONDC. ONDC, for your viewers, is basically open e-commerce. It's like Amazon but open, right? So which again leads to a lot of efficiencies in the ecosystem. So I think all these initiatives, and India is not alone, right? There are other countries who are doing really good job in this space.
Sure. So basically, these emerging markets are maturing. They're kind of catching up with Western markets and developing it and growing. And I guess also from an investment point of view, you might also be looking for a sort of balanced portfolio where you may have some higher risk investments along with lower risk investments. Is that the way you think investors are looking at this? Are they looking to perhaps widen a little bit their investments in less mature markets, should we say?
I mean, Michael, my view is traditionally investors have invested in trade asset classes mainly in Europe and America. They have not really looked at emerging markets so seriously, especially for this asset class, and there are multiple reasons for that, right? We have seen investors actually investing in equities in emerging markets for the short to medium term capital, but the patient debt capital has largely gone into let's say port infrastructure, road infrastructure, commercial real estate, common securities, bonds issued by well-rated corporate. But trade asset class is sort of new and quite complex for investors, to be honest. Some of these emerging economies still are sort of having the institutions being built. So from a regulatory framework perspective, policy framework perspective, investors may not really have as much comfort as they have, let's say, in UK, Europe, and some of these developed markets. But I think these economies do present massive opportunities, but there are inherent risks involved, right? Now, those risks are well understood. Credit risk, fraud risk, operational risk, FX risk. We spoke about it, but I believe all these risks can be mitigated, can be managed by the adoption of digital technology, something that we are trying to do at Credable, right? I mean, today, thanks to DPI, the digital and public infrastructure, a lot of these data points for analyzing the credit exposures or onboarding large number of borrowers by originators can be done digitally. You can pull all the data points through APIs, have tech do the credit scoring, and you are then able to really deploy your funds at use. So I believe there are opportunities. It's not an easy asset class, and that has led to a situation where investors have stayed away. But I believe with a lot of these DPIs and other infrastructure now coming in, there are opportunities which I think investors and originators should evaluate now.
Okay. So notwithstanding what you've already said, and how would you sum up, let's say, for an investor that usually focuses on more mature Western markets, what could they potentially learn from investing in emerging markets, and vice versa for those investors that tend to focus in emerging markets? What can they learn from investors in the more mature markets?
I think we really need cross-pollination, right? We have seen look at developed markets, UK, Europe. The institutional frameworks, the institutional capacities is really strong. That means investors, when they put their money at work, they know how the guidelines would look like, let's say even 4, 5, 10 years down the line. These are well-established rules, policies that they refer to. That may not necessarily be the case in emerging markets. I believe initiatives like ETDA Act, which I believe is revolutionary, will change the way investors look at this asset class, right? Will change the way trade is done and trade financing is delivered today. I think emerging economies need to accept it. They need to learn, from some of these initiatives. And I believe there are a lot of learning for developed markets from emerging economies, right? We spoke about DPI. I mean, I was actually listening to Mr. Nandan Nilekani yesterday. He was founder of Infosys and has really contributed a lot in this space. He was speaking about, the total economy today that works around this DPI is close to $100 billion. That's massive, right? It was zero. It was nothing, a few years back. So I believe there are a lot of things that Western economies can also learn from these emerging markets because they have in some ways leapfrogged the digital journeys, right, in their growth phase. And if we can cross-pollinate the idea, that's what I'm trying to do. I've spent majority of my time in APAC while working. I'm here now based in London, and my thought process is how can I learn from these markets, communicate that back to my team in India, or probably some of the ideas that we have deployed in India, how we can work with policy and regulators here in this market to really help them understand and appreciate some of those aspects, right?
Sure, sure. And as you mentioned, ETDA and also Melita, these have the potential to have a big impact on the market. Not everybody thinks that, or not everyone thinks it's going to happen that quickly, but this, of course, is going to be part of our discussion again at Trade and Investment Forum. So, Vikrant, thank you very much for your time today, and we look forward to hearing more from you at our Trade and Investment Forum in London.
Absolutely, Mike. I look forward to meeting you.
Thank you. And just to remind everyone, that's on the 16th of April at the offices of SMBC in London. And if you want to see the full program, then please go to our website at www.bcrpub.com. Thanks very much indeed. Thank you, Vikrant.
Thank you so much, Michael.